Welcome everybody to my masterclass on short-term decisions. I'm Jo Tuffle. I am a management accounting expert. I like to think I am anyway. I've got lots of industry experience in working in management accounting. I started life as an auditor, but I've not been an auditor since. Basically, I've been doing management accounting. I've taught on ACCA courses for over 15 years. And I'm passionate about supporting students. So some of my students are online today and they should know that I do support them well. I support them via WhatsApp. I do Zoom sessions with them. We do Q&A weeks and I mark lots of homework and give lots of feedback. So I'm passionate about that. I work with FME Learn Online. That's the college, as it were, that hosts my courses for me. We're all independent tutors, but we all sit within the umbrella of FME Learn Online. So that's where you will be purchasing the course through. I also have a YouTube channel, which means you don't have to purchase a course. And so this video probably will go on that YouTube channel as well. And there's numerous videos there. So you just need to search up Jo Tuffle Online Tutor. I like to have people subscribing. My dream is to get to 1,000 subscribers. And I want to beat Tom Clendon on the number of subscribers, and he's a bit far ahead of me at the moment. So somebody needs to help get that one up. So please subscribe to my channel and stay subscribed even if you pass PM. So we're doing short-term decisions. Now, please ask questions in the chat. I've got it open and hopefully I can see it easily if you do get there. And do participate in my polls. So short-term decisions topic is really concerned with looking at relevant costs in the viewpoint of those decisions on the right-hand side. So you can get an MCQ in this area, or you can get a long section C question. But mainly, it's all about thinking about what are incremental. All right, that's what you've got to think in your head. And relevant cost is a very important concept to this. So when tackling the exam, relevant costs should be used when making decisions only in the short term, all right? Because in the long term, they're no longer relevant. We should all be looking at all costs when we're making decisions for the long term. Calculations can be examined in a variety of contexts, either further processing or whether to extend opening hours. Issues around outsourcing decisions are a potential discussion requirement. And the two basic types of decisions where we look at relevant costs you can get are whether to do something or whether not to do it, or selecting between two or more different options. So what are relevant costs? These are the terms you need to learn. They're future, incremental, and cash. So future we mean by nothing in the past. So that's sunk, it's considered sunk. If you've already spent it, it's sunk. If it's a committed cost, like you've got to pay for your rents and rates, etc., that might not be spent, but it's future committed. All right, so you can't get out of buying it. Incremental is where you ignore costs that are not incremental. So if you've got somebody on a monthly salary, you've got to pay them whatever, even if they work on this project. So therefore, you ignore their costs because you're paying them whatever. You must include things like opportunity costs. Okay, so an opportunity cost is if you're looking at not doing a contract which you've committed to, and therefore you're going to lose out on sales and profits on that contract. That would be an opportunity cost. You must include avoidable costs. So if you were going to have to dispose of something, an asset, or dispose of something that you've already bought in inventory, and you can now avoid that because you're using the asset or using the inventory, they would be effectively a saving. So they're avoidable costs and they create a saving. Then we look at cash. Now, cash is important. No depreciation, no allocated costs. They've already been either committed to or spent. And all that's happening is they're being allocated to this job. Okay, so depreciation is spreading an assets cost across. Allocated costs be things like spreading fixed costs, fixed overhead costs to this project. So it's not cash. Okay, so you've got to remember, we don't include any of that. Hopefully those are quite clear. You should know those anyway. So we're going to look at telephone company, a past exam question. It's way back, but they do tend to try and repeat some of these questions, even if it's slightly differently written. So robber was one that came up in these short-term decisions areas. Again, it's not been published, but somebody said to me, it's exactly like that question that I've just done. And that was more on make or buy. So telephone company is one from the past, which I use on my courses. And this is a good relevant costing question. Short term means within 1 year, not necessarily, it just means short term decision. I'm going to make this price for this short term to this contract. But I probably, if the contract continues, I need to rethink that price. Okay. It's not necessarily 1 year. That's different. That's financial accounting, Jimmy. So telephone company specializes in the provision of telephones for commercial clients. It's got a potential customer called Push. He wants to install, or she wants to install, a telephone system. It's not a large one, but short-term decision is, what do we price this at? Because we were hopeful of future business. If we price it right, get in there, then we can then use it as a loss leader to get replacement systems and support contracts. Often that is what companies do. They price something low to get in and then use the support contracts. Think about printers. You buy your printer, it's reasonably priced, you think it's a great cheap printer, but then the cartridges start costing. It's all about the cartridges. It's nothing to do with the printer. It's the cartridges that they're selling for the profit. So this is what telephone company are thinking. They need to quote a competitive price. So they're going to use relevant costing. What you're going to be required to do for 14 marks is prepare a cost statement using relevant costing principles. So they're very clear. You need to show the minimum cost that T company should charge for the contract. Now, remember, it's a short-term decision. Make detailed notes. Look at that. It's in capitals, showing how each cost has been arrived at and explaining why. This is our exam, I'm afraid. You can't just write the calculation in your table. That won't get enough marks. The real marks are going for showing the calculations and explaining them, especially where they've been included or excluded. So do not just do calculations. The maximum of those 14 marks, the maximum, absolute maximum would be 6. The rest of it is all about writing. So how do you approach this? So you see you won't be able to see it on the left. It's just there as a picture to show you what the question would look like on the CBE platform. It has 2 parts, A and B. We're just going to do A for now. And so you're probably going to have to answer this in the word processor. Right, so there are 9 notes with information. So the way I would approach this is use a table for the calculations. Create a table in the word processor, probably 3 columns, and therefore 10 rows, something like that. Below the table, then make details notes with a reference to them in the table. So next to note 1, you would put 1, and therefore down beneath the table, you then write about it, explaining why you've put that figure in for that particular cost. It's important to explain why you're including and excluding. Okay, so if you put something in a 0, I don't want to see 0 in the written section. You won't get the marks. You need to explain it. Note 9, just for information, assumes there's 4 weeks in each month and that a standard working week is 40 hours long. That's slightly annoying that that's at the bottom. I'd just like to point that out, because that means you've got to read through all the information to therefore then find that note. For me, looking at this, it's kind of like, oh, I can just get on with it. I can start with note 1 and go systematically through. But unfortunately, sometimes they give information at the bottom, which you may need. So you probably should scan it, not necessarily read it in detail, just to make sure you find any assumptions that you need to have and have that in the back of your mind. So note 1 is lunch costs. And it says, one of the company's salesmen has already been to visit Push Company to give them a demonstration of the new system. together with a complimentary lunch, the costs of which were $400. Now, thinking of the principals, future, incremental and cash, the options are either 400 or 0. What does everybody think about lunch costs? And have a think about how you would explain it. The answer is you have to explain it. This is a past cost, is a sunk cost, and should therefore be excluded from the cost statement. It's already arisen and is therefore not incremental. It's a past cost, the sunk cost, and should therefore be excluded would be enough to get the half mark that you need. And then the other half mark would come from saying it's 0, and it's 0 in the cost statement with a nice label saying lunch costs, note 1. Note 2 is engineers. This is a little bit more complicated. So we read on the left, the installation is expected to take 1 week to complete and will require 3 engineers, each of whom is paid a monthly salary of $4,000. Now, one of the 3 engineers has spare capacity. The other 2 would have to be moved from a contract in order to complete this one. So going back to the principles which you may have learned, just giving you a pictorial view, labour relevant costs fall into spare capacity and full capacity. Spare capacity, it's nil. It's not incremental. Yeah, we've already paying for it. Full capacity, though, will depend whether you can hire more staff and therefore you go for a current rate of pay or whatever that hiring of extra hours will cost. But in this situation, we've got 2 engineers who cannot hire more staff. And therefore, we cost that up as the variable cost of their pay and the loss contribution on the contract. Now, I just want to clarify here. Everybody gets this wrong because they think, well, we're paying for them anyway. Why do we put in their labour cost? Well, it's not that. It's because they are only giving you the loss contribution in this normally in questions. And the real cost of the business is the lost sales less the savings in variable costs. And the only savings in variable costs will be materials. You can't save the labour. So that's why it's the variable cost of labour plus the loss contribution. Unfortunately, students don't get this because they present it in the more complicated way by showing you the loss contribution, but you can't save the labour cost. Let's now read this. First of all, the first engineer, hopefully everybody got, since one of the engineers has spare capacity, the relevant cost of his hours is nil. His wage will be paid regardless of whether he works on the contract. The 1,000 salary is not an incremental cost. The flavour of this is to say that he's paid anyway, he has spare capacity, and his salary is therefore not an incremental cost to this project. But the other 2 engineers, we've been given some more information. Contract X generates a contribution of $5 per engineering hour. So that $5 per engineering hour is important to note. That means the contribution has taken into account the selling price of the contract, variable costs of materials on the contract, and the engineering time on the contract. So the 5 is after taking off the engineering times cost. There are no other engineers available to continue with contract X. If these 2 engineers have taken off the job, it would mean they've missed the contractual completion deadline by 1 week. But T company would have to pay a penalty of $500. Since there's no other work scheduled for the engineers in 1 week's time, it will not be a problem for them to complete it. So you've got to reread that carefully. Normally, we would do this. Normally, their time is fully utilised, and we'd cost it therefore up as the opportunity cost of 40 hours for each engineer at 5, plus the $25 per hour that they're paid. Both would be relevant. But, and only because there's spare time, idle time next week, they are going to be idle and then can earn the contribution anyway. We don't have to cost up that lost contribution and time. The relevant cost, therefore, is only the penalty of $500. So you need to read this carefully, but also to get the marks, you have to go through the process of discounting the contribution of 5 as the opportunity cost and then reinstating the penalty. You would also get marks if you did in error say that there was an opportunity cost. It's all about discussing it. You wouldn't get the full marks, but you would get most of the marks if you decided to put in the penalty and the loss contribution. All right. So that was hard. So note 3, what are we going to do here? So read this through, and then we've got some options. So T Company's technical advisor would also need to dedicate 8 hours of his time to the job. He is working at full capacity, so he would have to work overtime in order to do this. He's paid an hourly rate of $40 and is paid for all overtime at a premium of 50% above his usual hourly rate. What do you all think? Let's show you. So since the advisor would have to work overtime, the relevant cost is the overtime rate of 60. It's not just the premium, which is 50%, it's the whole rate. So the premium of 50% was the trick there. Yeah, the overtime rate is actually the basic rate plus the premium. So therefore it's 480, 8 hours at 60 for the job. Well done, everybody. Note 4, 2 visits would need to be made by the site inspector to approve the completed work. He is an independent contractor who is not employed by T Company, and he charges Push Company directly for the work. His cost is $200 for each visit made. So what do you think? Is it A, B, or C? So the point is, if you reread it carefully, he charges Push Company directly for the work. This is a cost which is going to be paid directly by Push to a third party. So it's not a relevant cost for T Company. Aha. However, you may have got some marks if you did try and explain that as incremental. Okay, so note 6. Now I have jumped a note, all right? I know it goes 4 to 6, and that's because 5 and 8 is going to be at the end for you. So note 6 is all about telephone handsets. They've got 120 telephone handsets. Now, what is this? Think about it. It's not labor. It's basically materials. It's their inventory, okay? The current cost of these is $18.20, but he's already got 80 handsets in inventory. They need 120. These are bought at a price of $16.80 each. The handsets are the most popular model on the market and frequently requested by T Company's customers. So giving you some understanding of what goes on with inventory and materials here, if they're not in inventory, it's easy, current cost. If they're in continual use and need to be replaced, then again, it's current cost. If there's no other use, then it's any resale value. And if it's scarce and you use it and you can't replace it, then it will be the opportunity cost of its next alternative use. So your options here are 40 at $18.20, 80 at $16.80 plus A, or 120 at $18.20. The answer is 80, and again, can you please see how it's written? Because the marks aren't just going for saying the price or the cost. Okay, the handsets get 2 marks. Okay, the handsets get 2 marks. So 80 of the 120 are regular use. If the 80 are used in this contract, they need to be replaced. So you could just say the 80 of them will need to be replaced as they're in regular use. You need to address the fact that the original cost is sunk. We don't ever take that. And so the relevant cost, show them how you calculated it, is 120 times 18.20, which is 2184. Which is the current purchase price. So just make sure you can do all that. Therefore, you'll get the full 2 marks because you've explained it and you've done the calculation. Right, note 7 is again one of the harder notes. So this is again, we need to read this carefully. They need a computerized control system called Swipe 2. The current market price is 10,800. Right, okay, they need it. We don't have one, so therefore that could be the relevant cost. That's future incremental and cash. But T Company has an older version called Swipe 1. It could be modified at a cost of 4,600. So 4,600 is now also a relevant cost potentially. T Company paid 5,400 for it. Think about whether that is relevant when it ordered it in error. The current market price of Swipe to buy a new one is 5,450. But if they try to sell the one they have, they would deem to be used and therefore it's only worth 3,000. So think about this one in terms of you're comparing the cost of Swipe 1 to be modified to Swipe 2 to buying in Swipe 2, and which one would be the lower. I'll run through this one. The historic, to get the marks, you need to write these things out. The historic cost is 5,400, is a sunk cost. The current market price is 5,450. It's irrelevant. We don't want one. We need to compare the cost of converting to buying. Therefore, buying is 10,800. And what is the cost of converting? The modification cost is 4,600. Brilliant if you got that. But there is an opportunity cost because they could sell Swipe 1 for 3,000. So suddenly that needs to be added to the 4,600. Now, again, there's lots of marks going for this one. So the control system has 3 marks going for it. You're not going to lose all those marks if you don't get the perfect answer. But if you get a reasoned answer and then you don't include that 3,000, it's not going to be a game changer. You're probably going to get most of the marks, the 2 out of the 3, if not the 2.5. This is now time for you to do your polls. What is the relevant cost now of note 5? I'm going to do a poll for you. Okay, most of you participated, so I'm going to end the poll and share your results. So most people have gone for 125. Brilliant. And let's discuss why that is the case. The answer is 125 because the trainer is paid a monthly salary, irrespective of what work he does. This element of his cost is not relevant. So you need to explain that, why you haven't included his salary on a daily rate, and the daily rate would have been 75. However, the commission of 125 will arise directly as a consequence of the decision and therefore must be included. How about the next one? This again is going to be a poll. Okay, so 69% went for the right answer. And let's show you why. 1,300, and the reason is it's again in regular use. It's exactly the same question as before we did. And so the full 1,000 meters should be valued at the current market price. It's irrelevant that we've got 200 meters, which would be in inventory. That's a sunk cost as well of 120. Because we've got to replace it, we therefore need to pay 130. Here's the summary of what I'd expect to see. As I was saying, a nice table detailing them all out with notes, which I've already explained in the presentation. And this is how the 14 marks come out. So you can see the control system had 3 marks. The handsets have 2 marks and the training costs have 2 marks. The engineering costs would be split between engineering 1 and 2. So probably 1 mark for engineer 1 and the other 2 engineers would have got 2 marks. So it's not about the numbers though. Okay, so the absolute most would be 6 marks for the calculation of the correct cost statement. The rest of the 14, so 8 marks, is going for writing. So you must write something and explain it. Right, so part B of this telephone was explain the relevant costing principles used in A and explain the implications of the minimum price that has been calculated in relation to the final price agreed with push, 6 marks. How many requirements are there in that question? It says explain and explain. So there were 2 requirements and you need to address both. Explain the implications of the minimum price is just as equally important as explain the relevant costing principles. And what you need to do when you get these questions in the word processor is copy and paste the requirement into your answer and then separate the 2 requirements so that you address both. So how many marks do you think this would get? Relevant cost principles are future, incremental and cash. The cost calculated as a starting point only. If T company charged its price, it would make no profit or loss. Need to add a markup. It should only be used as a loss leader to attract more work from push in the form of replacement systems and support. Let me know in the chat how many marks you would give that out of 6. 3, 2, 2, 2, 2, 2, 2. Good, 3. Nobody is going over half marks on that one, are they, at the moment? That's quite good to know. Somebody's just got it spot on. Ish. Okay, I would give that 2.5 marks. Now, it might get 3 of push, but I'll tell you why I give it 2.5. Relevant cost principles of future, incremental and cash. That is just stating. It says explain. So 0.5 mark max for that, even though it's correct, because you correctly stated the principles, but you haven't explained them. Then I'd give 1 mark for the cost calculated as a starting point only. That's a really good valuing point. It's a starting point only, and you would charge this price and you would make no profit and loss. So you're adding value, okay? Need to add a markup. No idea what you mean. You need to explain that. Why do you need to add a markup? It should only be used as a loss leader to attract more work from push in the form of replacement systems and support. Love that answer. Because they've gone back to the scenario and copy and pasted the fact that push company wants to get extra work for them. And this is why it's pricing it using relevant costing principles. Brilliant, Mark. 1 mark for that. So therefore, I think 2.5 marks. So well done for correctly assessing that answer. Therefore, let's now look at the real answer, which I would give 4 marks to. There's 8 marks going for this question, but you'll be limited to 6. So you can get 4 marks by explaining part 1. Get 1 mark for explaining what relevant costs are. They're a change as a result of making a particular decision. They're future, incremental and a cash flow arising as a direct consequence of a decision. Now we're explaining them. Future, explain it and with an example. Incremental, direct consequence. If a cost has already been committed to, then it will arise irrespective whether the decision goes ahead, e.e. the trainer's salary. The cost must be a cash flow, not just an accounting adjustment, such as depreciation. Beautiful, 4 marks. How easy was that? By following the principles, explaining them and using an example. 1 mark, 1 mark, 1 mark. Then the second part, I think is harder to get, to be honest, than the first part. So the cost calculated as a starting point only, absolutely gave 1 mark for that. Now, I would like you to put in this is a short-term price. It should only be used as a loss leader to attract more work. I would prefer that in the form of replacement systems and support. They need a markup, okay, as relevant costing excludes costs that have already been incurred, engineers' time, and in the long-term business overheads. So there's the 3 marks going for that section. Hopefully you can see a way through that. So I've got 7 marks for what I've written there, but I'll be limited to 6. So I now want to look at some other types of scenarios which you may get. Make or buy decisions. This is quite topical. It comes up in MCQs, section B. There's been a recent section B one, which I'm going to go through. And it also comes up in section C. A make or buy problem is a decision about whether a company should make product or carry out a service with its own internal resources, or whether it should pay another organisation. If it has no scarce resource, then the relevant costs of the decision are just the differential costs between making and buying from a relevant costing point of view. All right, make sure you know that. Here is a question. This business wishes to maximize contribution and is considering whether to continue making components internally or buying in from outside. Which components should the company buy in from outside in order to maximize its contribution? Which components should it buy in? Okay. Remember relevant costing principles, future, incremental, and cash. What is relevant? What can't you save? What is not future, incremental, and cash? With that in mind, you're comparing the buy-in price to the relevant cost of the in-house cost. Okay, so which components should the company buy in from outside? Again, I'm going to do a poll. You might need a bit of time. Okay, so I'm going to end the poll. So most people think it's B only. Let's see if they're right. So for a make or buy decision, we compare the marginal cost, which is the relevant cost. So we exclude absorbed overheads. And therefore, contribution is maximized by selecting the lower cost. So component A, the relevant in-house cost is 12, but the buy-in cost is 14. Therefore, we're going to produce that in-house. But B, the relevant cost is 18 and the buying cost is 17. So therefore, it's cheaper to buy in. So therefore, the answer is B only. Remember, what should we buy in rather than make was the question. Now, this is the difficult one, and I really want to go through this. I know we're getting close to time, but I'm going to continue on because this was a very difficult question that came up. I know there's a Section C question out there which could come up on make and buy because they haven't released it yet, but they have released the Section B question, which they've done. So make or buy decisions with scarce resources. If an organisation has to subcontract because of insufficient in-house resources to produce everything they have, then the decision is not whether to make or buy, but instead which items to make. And the total costs are minimised, i.e. profits are maximised, if the units bought in have the lowest saving from making in-house per unit of the scarce resource. So you need to remember, you need the lowest saving. So the highest savings are the ones we're going to make in-house. The lowest savings are the ones we're going to buy in. That's what it basically means. So here's a quick example. Annie and Beryl. The variable cost of making an Annie and a Beryl is 16 and 14. But the buy-in cost is 20 and 19. So it costs more to buy in. So you save 4 and 5 from making in-house. The only problem is it's labour hours that are scarce. So Annie takes 2 labour hours and Beryl takes 4. So ordinarily, we'd be going for Beryl first as making it because we're saving from making in-house 5. But because we got to take into account the labour hours, 2 and 4, then the saving per scarce resource suddenly goes the other way. It's a bit like limiting factors analysis this. And therefore, the priority for making in-house is the highest saving, which is the 2, which is Annie. And the second one, Beryl, would be the one that we buy in because we're not making as much of a saving. So got that in your heads. Now we're going to have a look at the exam question. The horror of Horgren. I call it the horrible Horgren company. Now, the first question I'm not going through, it's a Section B question. I'm only going through parts 2 to 5 because that's about short-term decisions. The first question was about limiting factors. Horgren manufactures a range of dairy products and it produces 3 types of yogurt in 2 kilogram tubs to hotels and holiday resorts. Natural, beauty and luxury. The maximum demand is 5, 10 and 15. You've been given some cost data. And so those are in dollars per unit. Okay, that's not in hours or kilograms or machine hours. All right. But the data below lets you can convert that into hours and kilograms and machine hours in the notes. So let's look at the question. In month 2, machine hours are scarce. There are 120,000 hours available. How many units of fruity should Hallgren buy from the external supplier, assuming the company wants to maximize profit? So this is all about finding what one offers the lowest saving of making in-house per machine hour. Right. So those are the in-house relevant costs. Those are the external supplier costs to match to them. The differential will be the saving. You ignore the fixed production overheads, remember, because they're not relevant. But because we're using machine hours, and machine hours is a $1 an hour, we need to know what the machine hours are for each of those 3 yogurts, because there's only 120,000 available. And it just happens to be 1 divided by 1 is 1, 4, and 6. Yeah. Don't forget, because we're going to be allocating those scarce resources, we need the monthly demand too. So the first part of the question is to find the ranking. The cost saved by making is that for each of them, comparing the buying cost with the variable cost. We've done the machine hours, you divide that by the machine hours, and therefore the cost saved per machine hours then gives you the ranking. So we will make natural first and luxury second in-house, and fruity is going to be left till last. So the second part of the answer is, how many should we buy of fruity from the external supplier, which is basically their demand less what we're going to make. And it now becomes a limiting factors question where we allocate the machine hours of 120,000 to those products. Those are our maximum demands, and those are our machine hours. As the machine hours available 120,000, we're going to make the maximum of natural and the maximum of luxury. And so they use up 5,000 and 90,000. So the remaining is 25,000 for fruity. They use 4 hours. Therefore, we can make 6,250 units and therefore buy in 3,750 because their demand is 10,000. Oh my goodness. Who thinks that, and you can put it in the chat, is a lot to do for 2 marks? What do we all think? Let me know. Well, too much work for 2 marks. Absolutely. So what you need to do, this was a section B case study question. There are 5 questions in this. You need to ignore this till the end. All right, you need to ignore it to the end because this is the hardest 2 marks on the whole paper, I suspect, because it's going to take the longest time. There's lots of errors that you can make. And so ultimately, yes, you need to learn this process, but you may just give up those 2 marks because you're going to get easier, much easier 2 marks elsewhere in this question, much easier. Flag and move on. Now, if you get this in a section C question, you can systematically go through this and pick up marks as you go. This would not be 2 marks in a section C question. Absolutely no. It must be at least 6 marks, the amount of processes you had to go through. So yes, the answer is flag and move on and then come back to it within the 18 minutes, which are going on that section B question. There are so many more easier marks to get. This also, by the way, was a figure. You couldn't even guess it. You had to put a figure in, and nobody would guess a figure of 3,750. This was a slightly easier question in this section B. So in month 3, Hallgren correctly calculates that it should be able to make 5,000 of natural, 15,000 of luxury. Okay, so natural and luxury are now out the equation, and only 2,000 of fruity internally. The balance of fruity required should be bought in from the external supplier. So we're going to buy in 8,000 from the external supplier. How would this plan change, buying in 8,000 from the external supplier, if fruity incurred incremental now fixed costs of 8,000? So they now become relevant. So the saving we're making on 2,000 units is now potentially going to be wiped out because we've got fixed costs that we can't save. So we just need to calculate whether we can still make enough saving against the external supplier. Otherwise, we would change our plan. The relevant, again, now is just the direct labour and the materials and the 17 from the external supplier. The cost saved by making, we've done before, but remember, you may not have done that question. So it's 525, comparing the buying cost to the variable cost of making. Making fruity therefore gives a saving on variable cost of 525. We're making 2,000 units, so therefore we're making a total saving of 10,500. The incremental fixed cost of 8,000 now needs to come off this to see if we would change the plan. Well, we wouldn't, because we're still saving 2,500. So you need to take into account the saving on the variable cost and also the fact that you can't save those fixed costs. So you could have done it by saying the variable cost of making is 1175 times by 2,000 plus 8,000. What is that figure? The buying cost is 2,000 times 17. What's that figure? If the buying cost is higher, then we would still make the 2,000. The plan would therefore be unchanged. That's a slightly easier question, hopefully you agree, than question 2, which was the horror. That one was 2 marks also, okay? So that's an easier one to get, but it's still not the easiest ones to get out of this section B. The easiest ones to get are the next 2. So the use of external suppliers is outsourcing, all right? Just remember, the advantages of this, which you should be learning in bullet point fashion, but you will explain them if you ever have to write them out, won't you? Is superior quality and efficiency, cost savings and capital freed up, greater capacity and flexibility to cope with changes in demand. Those are the potential advantages, as long as you are going to make a cost saving. Disadvantages of outsourcing is the reliability of the supplier, loss of control and flexibility, and the effect on the existing workforce. So if you get a written question on outsourcing, after having done that make or buy decision in the calculation section, those are the things you need to apply to the scenario and explain, all right? Do not just state them. So I now have another question for you. This is question 4 on the Horngren company. Often the easier questions are at the end, so sometimes you may want to work backwards. Horngren company is considering outsourcing, including security, cleaning, general maintenance to well-established facilities. Which 2 of the following statements about this plan are correct? Notice I've highlighted 2. It means you have to select 2. If you only select 1, you'll get this wrong, even if you select the right one. So read them through. Economies of specialization should mean that Horngren company will make some cost savings. Horngren company will no longer need to monitor these areas of the organization. There will be an increase in Horngren company's management control over these areas. Management will be able to concentrate more on Horngren's core activities. So again, I've got a poll. So the 2 answers were A and D. The answer was not right for B, because services provided by outside suppliers will still need to be monitored. And C is incorrect. Much of the control over these activities will be passed to the external party. And so Horngren's management control is likely to decrease. A is correct. Economies of specialization would mean they're going to get cost savings. The whole point is when somebody specializes in something, then they can do it more efficiently and often cheaper. And therefore you will incur cost savings because they pass that on to you. Management will be able to concentrate more on Horngren's core activities. Absolutely. They no longer need to look at the security, cleaning and general maintenance work. They can concentrate on the manufacturing side, their core activity. So the answers A and D. Final bit, joint processing. Decision is whether to sell joint product at a split-off point or process further before selling. A joint product should be processed further past the split-off point. Anything before the split-off point, you ignore. So only if additional sales revenue after the split-off point exceeds the relevant further processing costs. So it's incremental sales revenue, incremental processing costs. The apportionment of joint processing costs is irrelevant to the decision. Byproducts are different. They're incidental and treated differently. They are a result of the joint process, all right? The sales value of any byproduct is not a joint product. Therefore, its split off is treated as a reduction in costs. It doesn't go forward, it's just incidental. When you look at this statement, which of the following statements about joint products are true? So they could both be true, neither could be true, just one could be true, and number two could be true. Having said what I've gone through, what do you think? So you can put in the chat both, one, two, or none. Well, thank you for responding. Okay, the correct answer is two only. Statement one is not true. And I don't blame you for not getting that one. I had to look it up myself, just saying, all right? So joint products are accounted for separately in the accounts, and a byproduct is treated as a reduction in joint costs. So joint products are then accounted for in a normal job costing way, whereas a byproduct is considered a sale which reduces the joint costs. That's how it's accounted for. So they're accounted for separately. Statement two is true. Joint products are normally only identifiable after their split off point. Hi, well done. Congratulations. I'm so pleased you all attended. It's lovely to see so many of you. And please let me know through feedback, any type of feedback that you can give, how that was for you. I'm an online tutor. Some of you are already doing courses with me. But if you want to find out more about me, then you've got my WhatsApp there. Please subscribe to my YouTube channel. I would love to have 1,000 subscribers. You can connect to me on LinkedIn, follow me on Instagram, Joe Tuffle, ACCA PM Tutor, like my Facebook page. Thank you so much for joining.